Hey, in this video, I want to talk about Broadcom and Oracle. So for Broadcom's ticker symbol AVGO, they reported earnings this past week on Thursday, and their numbers were fantastic. AI was definitely the growth story for them, where their AI revenue was up 65% year over year, and VM was like 26% year over year. So fantastic, executed really well. Demand is really strong, and 2026, which is their upcoming fiscal year, they project they couldn't give them the numbers because demand is so strong and it's changing all the time that they anticipate it'll be somewhere at the moment ballparkish 60 to 70%. So with that, in addition to that, they have a 73 billion backlog that they have to fulfill over the next 18 months. And so, in my personal view, that's a pretty strong number, and that could go up too because that's just presently how it stands. Another highlight is that they, for their AI GPU accelerators, which they call them XPUs, they had 4 customers and they added another one. Last quarter, they added Anthropic, which decided to put in 10 billion for it, and then now they've added another 11 billion to take more XPUs for in the end of 2026. And then the fifth customer is committed to 1 billion so far, but they won't name who is this customer. So it's a mystery. But the CEO said, customers that go into committing to working with them for a custom AI accelerator, they typically aren't there to just jump in and then jump out or try use something else too as a substitute. Typically, when you commit to it, it's like quite the commitment. You go through maybe different iterations and have different generations of these AI accelerators. So for them, it's good because it's definitely a relatively long-term revenue generator for them. And then the other thing that they talked about was OpenAI briefly, because there was an announcement about how they partner with OpenAI to build these 10 gigawatt data centers. And Hawk Tan, the CEO, clarified for the analysts and everybody basically that they won't see revenue from that partnership until 2027. So that was pretty good. And so from there, 2027, 2028, 2029, 2030, that's when they're going to get revenue from that project. And I'll link the transcript that you can read about for the earnings call in the description. Now moving on to Oracle. So Oracle reported their Q2 for fiscal year 2026, and the backlog that they have is now surged from 400 and some billion last quarter to 523 billion. And they said this was because Nvidia added to that backlog, and also Meta added to that backlog along with other people. But those were the two big dogs that is part of that backlog, and that's good because these customers definitely have money versus like OpenAI. They have a lot of dependencies on their success, and they don't really have that money, I suppose, to to allocate and commit to it, despite their 300 billion agreement to supply OpenAI with data centers and infrastructure. So yeah, in the quarter, their free cash flow was down. It's negative 10 billion, and then they mentioned like for the fiscal 2026, they have to up their capex spending to 15 billion, and so already at being so negative, and then they have to up their capex. I guess maybe that was like not so warmly welcomed by Wall Street, but they have to add that extra capex because they for their backlog, they want to fulfill it earlier, which they saying they can fulfill it now uh, with the capacity that they have. But they have to buy the equipment to earlier monetize on that. So in 2026, their capex will go up so that the revenue will show up on the 2027 fiscal year. And I don't know, maybe again, Wall Street didn't really like that. So there was that part, and they have to spend money to make money. And another thing that they mention is like when they do contracts and or agree to um, building something for a customer, it's all calculated. They make sure everything is available for procurement. They got the land, the lease, like uh, I guess sort of like planned and worked out, and then they make that agreement with the customer. So yeah, they addressed some like uh, you could say doubts about like how these things are just like more like paperwork, and there's a little more profound planning to it than just shaking hands with a customer. Okay, and then the other thing they talked about, the analyst was asking like, well, given all your backlog and the deal with like OpenAI, it seems like you're going to have to raise money for this, and so how much money do you plan on needing to raise? And the Oracle team came back and says, yeah, we've seen an analyst out there saying that we'll need like 100 billion, and they said that is not true. We're likely to use less than that, and probably significantly less than that. But they can't give you a number because they said there's going to be different models. Like customers can bring their own GPU, customers can rent the hardware, and if they do, in that case, like the cash flow coming through when the system is up, the data center is up, then they get money from their customers, and then from their customers they collect, and they also would then start paying off their vendors like in chunks. So it's not like they just front all the money. Of course, there's a business model where they front all the money, they build the thing out, and then they start taking in revenue from their customer, which is more capital intensive model. But there's various models, and I guess they have to work out. They haven't worked out which model is going to be used for which customer to fulfill that backlog that they have, and that could grow even further. So there was that, and then they asked about like, well, when an analyst like that, how you plan on reaching your 34% margin, and the Oracle team says, well, we would have to start the sooner we can deliver the capacity out, then the better we can able to achieve better margin or in those goals, because I suppose maybe pricing now like is better. I'm guessing that's what it's implying. I'm not an expert. That's what I infer from it. And so that, yeah, there's kind of like this rush to be able to get it out as fast as they can, so that they can capture that number which they've said in the past quarter, and they're sticking with it in this quarter. So there's a lot of positives, I think, from what Oracle said. They were shy a little bit on their revenue for this quarter, just a hair. And then their earnings per share, they really crushed it. I think it was 220 something or something like that, and the expectation was down like dollar 60. I can't remember the numbers, but yeah, they crushed that number, and their cloud business, software business. Well, I guess not the software business, but the cloud, the other segments other than AI infrastructure are growing really well. And then the CEO, or chairman now, Larry Ellison, was talking about how their data storage solutions database solutions are kind of like ahead of the game, where they can support multiple databases, and so these multi database platforms are gaining popularity, and they'll help the customers to manage their data, and also they have the ability to vectorize the data to help the AI models be able to find the data that they need to process in the database. So it makes things more, I guess, suppose efficient and more optimized. I'm not an expert at databases, especially for for AI. Just know a little bit, from reading and taking a course. But that's what they're saying. They're trying to tout their database solutions being something that's kind of unique for them, uh, that differentiates them from other people, and there's great value in it. Especially, another point he made was that most of the private data out there is on Oracle's database, and so and that's going to be worth a lot in the future when AI models will be using that data. So yeah, I think unfortunately the stock has plummeted, and we have it in our buying selling series demo portfolio. But I did reshuffle that into other stocks like Robinhood and Broadcom. But Broadcom also went down. Broadcom went down for I don't know, maybe rotation out of tech stocks into other stocks that were more predictable on profitability given the lower interest rates that are non-tech. And so I'm happy with that, that we can let that sit there within Broadcom. And I think both of these stocks will eventually go up, maybe Broadcom more sooner than Oracle. Oracle will, because they don't have numbers for Wall Street, and there's a little bit of uncertainty with their strong bulk of their business in the future with OpenAI. So they need to, I think, over the next few quarters start delivering on that. And then sometime along the way, it could be 1 quarter, could be 2 quarters, could be more than that, their stock price hopefully will go up. The investors on Wall Street will reward them for what they're claiming that they will do, can do, and how much they can make off it. So okay, yeah, that's all I have for today. Oracle have to maybe dead money for a while. Broadcom was quite high, came down. Maybe it'll bounce back quickly. I don't know. It was a pricey stock. I do have to say the analysts for Oracle after the earnings did lower their price targets. Broadcom, on the other hand, like about 10 analysts, they all upped their price targets. It's somewhere between it's about 450 price target right now. And today, December 12th, it finished around 360 and change. So if that's true, based on their models, it's got some decent upside. Anyways, yeah, that's it. That's all I want to talk about for in this video about Broadcom and Oracle. Hope you enjoyed the video. Any questions, go ahead and put them in the comments. Don't forget to like if you do.